Hello traders, this is Fawad Razak, market analyst for City Index. Today is the 6th of August 2024. So the focus remains on the dollar yen and yen pairs in general as the unwinding of the carry trades continue to dominate the headlines following the hawkish Bank of Japan policy meeting last week and some weakness in US economic data we've observed in the previous week as well. The dollar yen is now at severely oversold levels. If you look at the RSI indicator on this chart, you can see that the RSI has fallen below 15, which is extremely oversold. This level of oversold conditions has not been observed in recent history, but it does suggest that we could potentially see at least an oversold bounce, which actually we did see a bit of a bounce off the lows from Monday, didn't we? With rates jumping from around 141, what was the low? 141.69, reaching all the way to 146.42. So that was a big bounce, completely made back the losses suffered earlier in the session on Monday before the selling resumed a little bit from those highs. But now we're bang in the middle of the range from Monday's range. So where do we go from here is the key question. Do we continue heading lower, or does the dollar yen start to push higher? There are a couple of key levels to watch, and depending on the direction of the break, that could set the tone for at least the short-term outlook. On the upside, key resistance is seen at around 146.40ish to 50 area. This level right here, which provided support on a couple of occasions where the selling pressure stalled at on Friday before a continuation on Monday. We've tested this level now from underneath and it has held so far, suggesting that we are not out of the woods. So if this level were to break in the coming days, then we could well see a relief bounce at least towards a more significant resistance area of around 151, where we have the 200-day moving average and price support and resistance coming into play. But the key question remains, are we going to see such a big recovery following what has been a dramatic sell-off on the back of the Bank of Japan's policy decision? Perhaps the potential recovery could stall at around the backside of this broken bullish trend line. If I zoom out, you can see that the trend line had been in place since January of 2023. The fact that we've broken below it is clearly a bearish development. So the underside of this trend line could provide resistance at around 148.50, depending on how fast or otherwise price gets there, if it does at all. On the downside, some key levels to watch include 141.80, this blue shaded region. This is basically where the previous buying pressure started following a protracted downward trend back in the end of 2023. Once that level gave way and rates moved above the 200-day moving average, we saw a continuation of the upward move throughout the first half of this year until the breakdown of this short-term bullish trend line. Since the break of that trend line, we've seen a very sharp and sudden move lower. So from here, a lot will now depend on incoming US data, and unfortunately we haven't got much of that this week. We did have the ISM services PMI yesterday, which came out slightly stronger than expected, which helped to alleviate concerns about a looming recession in the US. Hence, we saw the dollar yen bounce back, and risk assets also staged a mild recovery of their lows, but pressure remains. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com.